Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Another day, another tariff threat. President Trump orders a plan for reciprocal levies on trade partners around the world, with a report due by April. Asian markets gain on the extended timeline. A 50% cut in defense spending. Donald Trump floats talks with Russia and China as a way to radically reduce military budgets. We discuss geopolitics from the Munich Security Conference. And Bloomberg learns HSBC is to start cutting investment banking jobs in Asia from next week. That's as the CEO of Europe's largest lender overhauls the bank. Happy Friday. Yesterday, you notched fresh records on European stocks. US stocks also closing in on new record highs. The slow burn of the tariff threat from the Trump administration giving some relief to these markets. European futures currently pointing lower by 0.4%, but of course, within the context of that record high of yesterday. FTSE 100 futures currently flat. S&P futures stateside, again, close to those record highs yesterday, looking to add just 0.1% so far in the session. NASDAQ 100 futures also pointing to gains. We just lost a connection here, but the cross-asset board as well will reflect what is happening in terms of a relatively benign treasury market. This week, of course, you had inflation data that came in slightly higher than expected. Producer prices yesterday as well, higher than the forecasts, and yet you lift the hood on the producer prices and the components that feed into the key measure, PCE gauge, scrutinised by the Federal Reserve. Those components actually looked a little less concerning for many economists who are passing that data. When it comes to inflation, Eurodollar currently at 104. Brent on the oil story currently up 0.2%. So a little bit of strength coming through for the oil markets. And gold not too far off $3,000 per troy ounce, currently up 0.1% for the yellow metal. Let's cross over right now to Singapore, where Avril Hong is standing by for a check on the Asian markets. Avril.
Yeah, Tom, we're seeing Asian markets, as you alluded to, in a pretty good mood. This is the third session of gains, and if you look at the weekly performance, it's their fifth in the green. And yesterday was about the prospects of peace. Today it's about the tariff delays, but also how Chinese tech stocks, with that late session stumble just a day ago, managing to get their mojo back today after these details we're getting about how Apple is going to engage with these Chinese tech names, right? Alibaba, and then now Baidu also in the mix to offer AI features on iPhones in China. And not only that, we now have that timeline by the middle of this year. So that's what's fueling the Chinese tech stocks along. But amid all this, of course, there is a bit of caution. Trump reportedly did single out Japan and South Korea. Worth noting as well that not just stocks gaining in Asia, so are the Asia currencies, save for the offshore renminbi, reversing some of yesterday's strong rally. Flip the board. I thought I'd further put things into context for you about how Chinese stocks are really getting their, tailwind from these valuations. If you look at this chart courtesy of MLive's Mary Nicola, it shows you the equity risk premium slightly higher than some of these other peers. So it kind of makes you wonder, do Chinese tech stocks or Chinese stocks overall kind of protect from the tariff noise? Is that an option now, especially given the DeepSeek narrative that's underway, Tom?
OK, some of these equity markets in Asia then refinding their mojo. As you say, Avril Hong, happy Friday. Thank you very much indeed. Out of Singapore on the Asian markets. Let's get to the tariff story then, the latest tariff story, of course. Donald Trump has ordered his administration to consider imposing reciprocal tariffs on trading partners as he targets a global trade system he complains is tilted against the US. The US president also warning that import taxes on cars, semiconductors and pharmaceuticals over and above the reciprocal tariffs will follow.
Reciprocal tariffs, those two words, reciprocal makes tariffs really fair.
There'd be no exemptions, right? It would be all auto imports?
Any exemptions now, because you don't need to.
We understand the measures may be implemented by April. For more, let's bring in opening trade anchor Kriti Gupta. Kriti, to what extent do we understand the importance of these tariffs, how concrete they're likely to be, and whether or not this is in fact just another negotiating tactic from Trump and his team?
I think all of the above is the right answer. This is 100% another negotiating tactic, and you are seeing an element of that when it comes to just the way he's talked about it with Mexico, Canada, Colombia, even China. So there is that element of it. You can already see that delay baked into now April, where it was originally meant to be March 1st. You can already see that showing is showing up as a means to really kind of kickstart some of those negotiations. The other piece of this, though, is that the reciprocal tariffs are something he's talked about on the campaign trail certainly for a very long time. I think the new piece of information here is that it's not just tariffs. It's not just the fact that if an emerging market country, you're seeing the visual on your screen right now, has tariffs on American exports, then that percentage is going to be matched from the U.S. It's other things outside of tariffs as well. He's talking about things like non-tariff barriers, including subsidies, regulations, VATs, value-added taxes, which, of course, is very relevant here in Europe, and exchange rates. Remember, he talked about the Chinese currency manipulation quite a bit in his first administration as well. For Europe, I think the interesting piece is the regulations, because he's talked about European tech regulation as a very big piece of it, naming the likes of Apple, Microsoft, even Meta as being, quote, treated unfairly by the European regulators. The other one I thought was interesting was subsidies, because that has a lot to do with agricultural products. The United States subsidizes its farming sector. Most countries subsidize their farming sector for the agricultural goods. But the U.S.'s number one export is the agricultural goods. The second is Boeing airplanes. So you can see that this idea of really tackling the subsidy story in farming in other parts of the world would actually help the export story for the United States. So these are the other things that we're trying to kind of wrap our heads around about which of these would actually be targeted and which would be ways to actually calculate what those tariffs actually look like.
That's really interesting that you highlight. Maybe the importance is less about the tariffs, maybe on the non-tariff barriers that Trump and the administration are now focusing on. Very interesting, particularly when it comes to EU. The Indian Prime Minister Narendra Modi has been in the White House. This is also a protectionist market as well. Has Narendra Modi managed to put out a template for how to negotiate with Trump? What does that tell us? Where does India stand, and what does it tell us about how the EU may learn from India?
He hasn't set out a negotiation, but the fact that he's one of the early leaders to actually come to the White House is quite telling, especially because there is an economic relationship between the United States and India that I think a lot of people don't fully understand. And specifically when it comes to the defense sector. And that's really, really important, because the United States doesn't actually have as much of market share in India's arms sector in terms of exports as, say, Russia does. India buys more defense from Russia than it does from the United States. And that's very unlike some of other major allies of the United States. So that's a big crucial piece. The other piece is H-1B visas. And this is something that really impacts the tech sector. We know that India also has its own burgeoning tech sector in Bangalore. So they're also trying to compete in a very, very big way. But the H-1B visas is really crucial, because this is coming amid a very hard line on immigration that you are seeing. So that's going to be crucial in terms of seeing just how you start to really address the labor shortage and actually help some of the companies that he says are under scrutiny from the likes of Europe.
Yeah, we know people like Elon Musk are in favour of those visas. Kriti Gupta, thank you very much indeed. Anchor, of course, of the opening trade. Now, investors appear to be cheering Donald Trump's decision not to implement reciprocal tariffs right away. Let's get more from Bloomberg's Valerie Teitel on the market reaction. Valerie, talk us through how these equity markets and fixed income have reacted then. A bit of a shrug, arguably, to the latest tariff threats from Trump.
Yeah, that's right, Tom. The fact that these tariffs were not implemented immediately, but that there is going to be a delay, possibly until April, really paved the way for a risk asset rally yesterday. We had the S&P 500 closing a whisker away from all-time highs. Frankly, a date around April 1st that is light years away for this market. It really paves the way for this rally to continue further. We also saw the dollar softening off the back of this tariff delay. The Bloomberg Dollar Index yesterday closed down 0.7%. If we flip on, we can take a look at how the dollar has fared since the highs of mid-January. We are now down over 2% from January's peak for the Bloomberg Dollar Index, all on the back of this softening of language when it comes to tariffs from Donald Trump. We were very much braced for immediate tariff action, but it seems it's just delay after delay on that front. If we flip on, we can talk about one asset, though, know that is not holding back, and that is European stocks, Tom. We saw the Euro Stocks 50 index, that's the mega cap index here in Europe, breach its highs seen 25 years ago to close at a new record. This is a combination of two things here, Tom. Both that tariff delay, add onto that the hopes for an end of the Ukraine war, boosting European stocks. We had that Euro Stocks 50 breaching those highs seen 25 years ago. The bull case for European equities rolls on.
Yeah, there we go. Despite all the headwinds geopolitically and potential challenges. Bloomberg's Valerie Teitel, thank you very much indeed on the market reaction to the latest Trump tariff threats. To technology right now, Alibaba's chairman says Apple iPhones will use its AI technology. This as the US tech giant's China business faces, of course, significant challenges from geopolitical tensions, tariffs and anti-American sentiment in the region. For more, let's bring in Robert Lee from our Bloomberg intelligence team. Rob, how significant is it, this partnership, for both Alibaba and Apple?
OK, I think the quick answer for that, and it applies to another company that's been tied up in this news story, Baidu here, which is the Google of China. It's good for sentiment for all three companies, but what does it actually mean to the bottom line? And I would argue the impact on the bottom line for all three companies is fairly insignificant.
OK.
That was a very brief answer. I can elaborate.
No, that's good. David Inglis, of course, key member of our team in Hong Kong, pointing out that the word for love in Chinese is I, as in what I need, I love you, I, or in Pinyin, AI. So interesting in the context of the focus and the fact that there's been this catalyst in terms of the money flowing into Chinese tech stocks because of I or AI. Talk to us about how Apple intelligence could potentially transform that company's prospects that have been challenged in the Chinese market. Domestic competition, of course, but also some restrictions as well.
OK, so in terms of China smartphones, as is the case across the whole world, this is a commoditized technology at the moment. You know, the days of super growth within the smartphone market are way behind us. And what we've seen over the last 5 to 10 years in China is foreign brands, with perhaps the exception of, well, no, including Apple, actually, either come under pressure or actually get squeezed out. So, for example, there was a time many years ago where Samsung was the #1 selling brand in China, and it's hardly in the market these days. So the reason for that is because of the commoditization of the technology, local brands have really narrowed the gap. The technical barrier to entry just isn't particularly high. And Chinese brands are obviously more attuned to local needs. Their software and the apps that come on them, and again, are more attractive and of more interest to Chinese consumers. And in terms of their features, whether it is camera, price points as well, they're all, priced attractively, offering premium features at a discount to these big Western brands. So this has put the Western brands under pressure. As I said, Samsung and others have effectively exited the market. So we all know that Apple is still under intense pressure. Will Apple Intelligence, or addition of in China, transform its prospects? It seems hard that's going to be the case. And the reason is AI has already been launched on many competing local smartphone brands for the last 9 to 12 months or so. So Apple is really playing catch up in the China market. Perhaps I think at best it could help stabilize its share, because as we know, there's a lot of tribalism in terms of smartphones. If you like Apple, you're probably on it for life. So, but I think it's going to be very difficult in a commoditized sector with very hot competition from local brands to really narrow the gap.
OK, interesting. So Apple really still playing catch-up. Maybe Alibaba is the bigger beneficiary. With their earnings out next Thursday, of course, will be scrutinised in terms of the potential lift from their investments around AI. Rob Lee from our Bloomberg intelligence team with the breakdown. Thank you very much indeed. Happy Friday. Coming up, global leaders meet at the Munich Security Conference today with a key goal of working towards a peace deal for Ukraine. We report live from Munich. That is next. This is Bloomberg.
I believe he wants peace. I believe that President Putin, when I spoke to him yesterday, I know him very well. Yeah, I think he wants peace. I think he would tell me if he didn't. It's not a question of liking Russia or not liking Russia. It was the G8. And, I said, what are you doing? You guys, all you talk about is Russia, and they should be sitting at the table. I think Putin would love to be back.
US President Donald Trump speaking about his meeting with Russian President Vladimir Putin, or at least his phone call. President Trump has also proposed a meeting with his Russian and Chinese counterparts to discuss cutting defence spending in half. For more, let's get to Bloomberg. In half. Let's get to Bloomberg's Oliver Crook, who is at the Munich Security Conference. Ollie, this is a major event over the next few days, and of course the Trump plan around Ukraine is going to be scrutinised. How seriously, though, should we take this proposition? Is he just airing an idea here, talking about cutting defence spending with China and Russia by 50%? I mean, how seriously do we take this, or at least should people on the ground in Munich at the Munich Security Conference be taking this?
Yeah, well, listen, I think it's very hard to say how seriously we should be taking it, how we should frame it, but at least we're in the right place to ask the right people how they're feeling about it, right? We're speaking to a bunch of the CEOs of the defense contracting companies later this morning. I mean, when you hear that the U.S. wants to have its military budget, China potentially, Russia, that's going to have a huge impact for many of these companies, potentially because they're also in ramp-up mode, particularly for the Europeans who want to be spending more. So just to sort of summarize, because 24 hours this week has felt for like a very long time, it began with that Trump-Putin call, basically beginning negotiations, putting a lot of things on the table that the Europeans were not pleased about, though, of course, many of the things he put on the table, I think, were already seen as inevitabilities in peace negotiations, giving up some territory, NATO membership for Ukraine basically not really on the table. But again, the Europeans have been very unhappy about how it's gone because they've basically not had a seat at the table. And then on top of that, we were also hearing that potentially there was going to be a meeting here in Munich with high-level members of the Ukrainian, Russian, and U.S. delegation. Again, we had not heard that until President Trump had sort of suggested that yesterday. We still don't have a huge amount of detail on whether or not that's possible. On the Ukrainians, on their side, have said that basically they're not going to begin to enter into any kind of talks with the Russians until formal negotiations begin. And you can understand that. But as you can imagine, Tom, bringing all of these threads together as they sort of drip from the United States across the Atlantic is going to be the great challenge for all of these sort of leaders, defense ministers, defense companies that are going to be meeting just behind me in the hotel.
Where does it leave Europe in terms of its involvement with Ukraine? President Emmanuel Macron, speaking to the Financial Times, not being directly critical of the Trump plan on Ukraine, but clearly European leaders want to have that seat at the table. Yeah. Is that going to happen?
Exactly, but here's this problem, Tom, is that they can't really do anything but ask. There's no way that they can sort of impose themselves on these negotiations, and that is in part, frankly, their own sort of fault because they've not been spending on defense, and unless they have a sort of strong military presence, they can support Ukraine militarily alone. They don't really have a voice, so that is part of the issue, and that is an issue, by the way, that Donald Trump has emphasized for many, many years about the Europeans, certainly in his sort of first term. I mean, what Kohl was referring to, he said that basically the Trump treatment is electroshock for Europe, and that basically Europe needs to sort of muscle up on defense. We heard something very similar from the potentially next chancellor of Germany last night, Friedrich Merz, saying that basically he's expecting a very aggressive speech from J.D. Vance here at the event today, and basically suggesting that Europe is on its own. This is exactly the sort of idea that was reflected when I spoke yesterday to Carsten Brauer. He is the top general in the German military. When the politicians talk about promises, he's the one who has to execute it. He runs the German military. Have a listen to what he had to say.
What we still see is that Russia is a threat for Europe. So this entire negotiations, or better to say the discussions over the last 24 hours, will not change this. And my perspective on this is that we have to see the security of entire Europe first. And this is what I'm responsible for, to look into Germany, to look into security for Germany, and of course with my allies, with my allied colleagues, also for entire Europe.
And Tom, we talk a lot about the sort of money that needs to be spent on hardware, and of course this is a sort of a major issue for the Europeans. But there's another question here, Tom. There's one of also manpower. We were talking yesterday with the general about basically, do you have the number of people required to secure Europe? And he says not even really close, that basically the money that they've put has basically just been enough to fill in the potholes. You're not even close to where you need to be on the money, and you need to get more people. And we talked about potential conscription in Germany. Is that something that they're going to have to look at going forward? He said that, yes, potentially they will. Right now they want to do it on a voluntary basis, do sort of semi-conscription, but these are all the conversations that are going to have to be happening. And these are difficult conversations, Tom, to have politically, as you know.
Yeah, absolutely. The conscription debate is being aired in Germany. It's been aired here in the UK as well. Oliver Cook, great reporting, joining us out of Munich, who'll be covering that conference for us through the next 3 days or so. We're going to have special coverage, of course, from the Munich Security Conference today and interviews with the German Foreign Minister, as well as leaders at Saab and Kongsberg Defence and Aerospace. Coming up, Hamas says it will free hostages on Saturday. The latest from the Middle East next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Hamas says it will free hostages tomorrow, as scheduled, backing down from a threatened delay that had cast doubt on the durability of the ceasefire. Let's get the latest from Bloomberg's Dan Williams, joining us live from Jerusalem. Dan, what do we know about this decision, apparent decision by Hamas to release the hostages? Why was there a standoff anyway, and what's led them to commit to continuing their commitments around the ceasefire, of course, and that release of hostages tomorrow?
Well, good morning, Tom. There was a cascade of recrimination accusations that appeared for a time this week to be derailing this deal and indeed potentially even leading to a resumption of the war, with Israel mustering forces anew inside Gaza, on the Gaza periphery, saying that should there be a resumption of the war, it would be of a different intensity and would actually lead to the defeat of Hamas, Israel said, and the implementation of President Trump's very controversial idea of relocating the bulk of Gaza's Palestinians abroad so that the Gaza Strip can really undergo a makeover led by the United States. So the rhetoric there was very fierce, and it appears that Hamas has relented, and this latest hostage release is on track to take place tomorrow. The original reason given for Hamas, it alleged that Israel had not met its obligations regarding humanitarian relief for the Gaza Strip as part of this stage of the truce. Israel denied it. It would appear Hamas may have been testing the waters. It appears Hamas may also have been wondering about which hostages to release next and in what condition. It's worth noting that when the last batch of hostages went free on Saturday, they were remarked upon for their awful appearance. They were emaciated, they were dazed, and indeed even President Trump described them as recalling Holocaust survivors. So there's been some speculation that maybe Hamas was trying to buy time in order to feed the next batch of hostages, maybe choose the next batch of hostages appropriately so that their appearance would be less shocking and less deleterious for Hamas's international image. I think it's worth watching tomorrow when this hostage release happens, the pageantry, if you like, the stage managing around it, if Hamas is trying to tone down things given the blowback it got for what happened last Saturday. As of today, we're waiting to hear the names of those hostages, who will be going free, and in exchange which Palestinian prisoners Israel will be releasing.
Dan, what do we know about the prospects of stage 2 and stage 3 of this ceasefire?
That's a terrific question. Everything is really up in the air. There's very little known. This is really where the rubber hits the road, because the current stage is pretty much agreed upon. It's interim. It's a short, defined truce of 6 weeks. But once you enter the coming stages of the truce, it becomes existential. Why? Because Israel wants a long-term truce, effectively the end of this war, to entail the end of Hamas rule in the Gaza Strip. Hamas has given no indication it would relinquish power, and indeed Israel has said it's willing to go back to war in order to destroy Hamas should there not be an agreed solution. So really, neither side is giving in on this, and it's very hard to see how either side would be able to accommodate the other in turning this truce into a more sustainable deal. But we really are near decision point. It's going to have to be decided in the coming days, because otherwise this truce will simply fizzle out when the 6-week period is done.
OK, really interesting context. Bloomberg's Dan Williams in Jerusalem on the prospects of this ceasefire being continued, of course, between Hamas and Israel. Dan, thank you. Coming up, we're going to switch focus to the corporate space. Banking and HSBC said to be planning fresh investment bank job cuts. We get the details and the latest. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Friday. I'm Tom McCain's in London. These are the stories that set your agenda. Another day, another tariff threat. President Trump orders a plan for reciprocal levies on trade partners around the world, with a report due by April. Asian markets, though, gain on the extended timeline. A 50% cut in defense spending. Donald Trump floats talks with Russia and China as a way to radically reduce military budgets. We discuss geopolitics from the Munich Security Conference. And Bloomberg learns HSBC is to start cutting investment banking jobs in Asia from next week as the CEO overhauls Europe's biggest lender. Checking in on your markets this Friday, European futures pointing a little softer, down 0.4% after fresh record highs for the Stoxx 600 yesterday. European stocks continue their gains today, though, pointing to a bit of profit-taking, maybe, and possibly awaiting some data out of the US. Retail sales data out later today could give us a gauge of the health of the US consumer. Inflation, of course, continues to be a topic of discussion, and where it leads the Federal Reserve, with markets pricing in just one additional cut by the end of this year. FTSE 100 futures currently flat. S&P futures, after adding around 1% yesterday, looking to further gains of about 0.1%. Nasdaq 100 futures pointing to gains of just 13 points, but having rallied yesterday 1.4%. It's the slow burn of the Trump tariff agenda that seems to be giving some relief to these markets. Let's split the board and have a look cross-asset. Relative stability across the Treasury markets today after some volatility on the CPI data earlier this week, and of course a testimony from Jay Powell. Currently 4.53 on your US benchmark 10-year. Euro dollar at 1.04, down 0.1%. Brent currently up 0.2% on oil at $75 a barrel, and gold continues to close in towards that $3,000 per troy ounce level, currently at 2,933, up 0.2%. Some breaking news crossing just in the last couple of minutes around what is happening in China. President Xi Jinping is expected to be holding a symposium focused on the private sector. This, according to reporting from Reuters. And in attendance will be Alibaba's Jack Ma, of course, the founder of that business. And I believe this is going to be the first time that Jack Ma will be in a room with President Xi Jinping, at least publicly acknowledged, since, of course, the speech that he gave, momentous, in October of 2020, that led to the removing and ending of the Ant Financial IPO, and essentially a long-run dressing down of Jack Ma. So his fortunes have turned around. Alibaba's fortunes have turned around as well, adding about $40 billion to market cap just in this year alone on the investments they've made in AI. They have as well partnered now, we know, with Apple as well to provide some of those AI services on the iPhone in the Chinese market. So we'll continue to watch that stock, currently up 4% in the session. Let's move from tech to banking now, because Bloomberg has learned that HSBC is kicking off a fresh round of job cuts at its investment bank as the new chief executive continues to overhaul Europe's biggest lender. The redundancies will start in Asia as early as next week. For more, let's bring in Bloomberg's Manuel Baiguri in Hong Kong, who helped to report this story out for us. Manuel, thank you for joining us. Walk us through the details then. The job cuts continue at HSBC.
Exactly, Tom. The job cuts set to continue at HSBC, Europe's biggest lender, as you well said. I mean, we expect that to start happening as soon as next week. The bank is set to report earnings as well. And, I mean, their restructurings, the overhaul of HSBC has been ongoing for quite some time already. As you explained, Tom, the CEO is looking for ways to streamline and boost the efficiencies at the bank. And I mean, recently, just a few weeks ago, they announced the kind of like shutting down of some advisory and ECM related services in Europe and in the US. And obviously people here in Asia are also worried about how that it's going to impact the bank and their business here. The job cuts are just part of the cost-cutting efforts by the CEO as he tries to revamp the whole structure of the organization. But there is more to come for sure as the bank becomes more of a so-called boutique in a way with balance sheet. And they're trying to find new ways to continue to serve clients, but in a more perhaps nimble and smaller way. So it'll be interesting to see how many people in the end get affected by this new round of cuts. Still, the details are a little bit unclear. It'll become more apparent after full year earnings are reported next week.
Manuel, the stock did not perform badly. There were some choppy moments, but didn't perform badly under former CEO Noel Quinn. So what is the rationale for these restructuring plans for the new CEO, and how effective have the changes been so far?
You're absolutely right, Tom. The stock didn't do that badly. I think it's a more long-term approach to where banking as a whole is heading, and we've seen restructurings and reorganizations across, all the major banks in Wall Street. Here in Asia, I mean, the ongoing layoffs over the last few years have been quite notorious, and that applies also to some extent in Europe and in the US. I think the new round of cuts goes beyond, a specific period of time or the stock performance, which, as you said, hasn't been that bad. It's mostly about long-term what HSBC's strategy is going to be and what they want for the bank in the long term. And I believe they are adjusting to a new reality and to a new geographic footprint. Now, what's unclear yet is how that's going to pan out when it comes to business areas such as M&A and ECN, for instance, and how that's going to affect and impact their clients and their potential mandates that they have ongoing. That is a big question mark right now.
OK, Bloomberg's Manuel Baigorri reporting out this latest scoop from the team there around HSBC and further job cuts and the implications, what the restructuring could mean for that lender. Manuel, thank you very much indeed. Now, Bloomberg has learned that Spanish bank, meanwhile, Santander, explored a potential sale of its UK retail business with NatWest. Sources say early-stage talks took place last year and both parties remain interested in a potential deal. The British lender is due to release earnings in about half an hour, 7 a.m. UK time. And NatWest CEO Paul Thwaites will give us his first TV interview since taking the job. That is, again, at 7 a.m. UK time, so definitely stay tuned for that interview coming in up in less than a little over 20 minutes' time. So stay tuned for that interview with the new CEO of NatWest. Now, Jamie Dimon says JP Morgan will scale back spending on some diversity initiatives that he sees as a waste of money, while also reiterating the bank's commitment to working with Black, Hispanic and LGBTQ staff. In an answer to an employee question, JP Morgan's CEO said the plans to cancel some initiatives were about costs that went too far, rather than blowback from the new Trump administration. To Germany now, and politics of that nation, of course, as they lead up to the elections. Chancellor Olaf Scholz says he's counting on undecided voters to help him close a big gap in the polls ahead of next week's German election. Scholz spoke during a Q&A on German television, adding he's still optimistic he can win. Let's bring in Bloomberg's Christoph Rault in Frankfurt with more. Christoph, what is the reality and the likelihood that Scholz can, in fact, turn things around? According to some of the data, around 40% of voters are still not fully committed to a party.
Yes, good morning, Tom. This was actually the one new line that Olaf Scholz offered on TV last night. As you said, the numbers for him look pretty much unchanged for several weeks. So he's gradually sort of running out of time. We only have one more week to go until the federal election on Sunday next week, on February 23rd. And basically people didn't learn like a ton of new things, to be honest, last night. He essentially repeated his narrative on key areas like domestic security, on how to revive the economy. But it was little bit difficult to see how that debate would really sort of spark some new momentum for him in the election campaign.
What are the latest polls showing about the leading parties, how the CDU is doing versus the SPD, versus the Greens and the AfD? How are things shaping up as we count down to that vote?
We did get some fresh numbers last night. Essentially, they did show some smaller changes among the smaller parties, but nothing too material. For the bigger ones, the picture was pretty much unchanged. The Conservatives are leading currently with about 30%, followed by the far-right AfD with about 20%. And then there's a pretty significant gap followed essentially by the Social Democrats, the party of Olaf Scholz, and the Greens, who are both around 14, 15% maybe. So that picture from an overall view, it looks pretty much unchanged for several weeks by now.
OK, I said there were 40% undecided voters. It's in fact 13% of voters still unsure, 18%, an additional 18% either don't intend to vote or unsure who they will. So closer to 30%, in fact. So I'll just correct that for you, as after I said 40%, it's closer to 30%. Christoph Raud, thank you very much indeed for the latest when it comes to the German election. Of course, that vote taking place on the 23rd. We're going to bring you all the news and analysis, market moves as we continue to build up to the German elections later this month, including a special programme when polls close on February the 23rd, live from Berlin. Later today, Bloomberg's Francine Lacqua moderates a panel from the Munich Security Conference on the future of US-Ukraine security cooperation. What a topic right now, given Trump's plans, with the Ukrainian President Volodymyr Zelensky and US senators, including Lindsey Graham. So certainly tune in to that panel. Meanwhile, Apple and Google have restored TikTok to their app stores following reassurances from the US Attorney General that a ban wouldn't immediately be enforced. The two companies had removed the app in the US last month to comply with a law passed by Congress. On taking office, President Trump signed an order that delayed any action by 75 days. Starbucks CEO Brian Niccol is wrapping up a visit to the Gulf region, where the US coffee chain has partnered with Kuwait-based Al Shaya Group since 1999. Niccol's been tasked with turning around, of course, the global brand that's faced headwinds, including price hikes, controversy over unionization, and boycotts over the war in Gaza. He spoke exclusively to Bloomberg's Jumana Pasecci in Dubai.
The boycott and that whole information cycle, it's really unfortunate because obviously it hurts the brand, it hurts our partners in the stores. And the thing that's really disappointing about it is it's just not based on anything that's accurate or true. We've never supported any militaries.
All right, Brian Niccol, Starbucks CEO, speaking to Jumana Pasecci earlier. Coming up, the AI revolution looks set to transform healthcare. We're going to discuss with Lateral Labs CEO and founder Simon Kohl. That is next. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Startup Latent Labs has caused something of a stir after raising $50 million to discover new drugs that will use AI to make biology, quote, programmable. The company says the technology has a range of benefits, notably cutting the costs of finding new drugs. Joining me now is Lateral Labs CEO and founder Simon Kohl. Simon, your pedigree previously at Google DeepMind around AlphaFold makes you stand out in the space, but also you have some really big backers as well. So it's consequential. Talk to us, though. This is a competitive space. We come across a lot of companies using AI to develop drugs. They want to shorten the time frame. What does Latent Labs do? What do you guys do that sets you apart, and how are you going to deploy this cash?
Yeah, good morning, Tom. We are indeed working on making biology programmable. We're working on protein design first. We're building frontier AI models that learn the fundamentals of biochemistry. We think we'll be able to apply these successfully to antibody design, protein engineering, such as enzyme optimization, build tooling for genetic engineering. And we do believe that there's a big opportunity here to essentially move the drug discovery process that is currently dominated by experimental discovery into the computational realm. That's our North Star, essentially make this a computational discipline and thereby really speeding up the process, reducing risk, opening up white spaces that aren't accessible with the current techniques today.
What does the $50 million do to get you closer to that goal then?
It's really accelerating us across the board. It allows us to accelerate our R&D, get more compute resources required to train these models, expand our teams, and really get the commercial traction that we're looking for, really enabling our partners. That's what we're setting out to do with this raise. OK, so you're buying compute as well. You're buying those GPUs. Are you buying them from NVIDIA? Who are you buying them from? We are working with cloud providers. We haven't disclosed with who we're working yet. But yeah, certainly, as you know, it is a business that runs on GPUs. Yeah. And yeah, we're scaling up. What is the potential market opportunity then, Simon? Yeah, it's big, right? Like the space as such, even just in biologics, is a $1 trillion market where if you can compress the timelines, if you can reduce risk, if you can even open up new areas of difficult targets, we think there's a massive opportunity here. Tapping into that is what we're looking to do.
I've spoken to Demis Hassabis of Google DeepMind about this, around when we get our first AI-discovered drug, and he gave a time frame of around 12 months, but of course there's the regulatory and clinical trials part of it as well. What is your expectation? When do we start to see AI-developed drugs in our pharmacies, in our hospitals?
Yeah, that is a fantastic question. I think, it's still early days. AI is transforming the industry. We are seeing these real gains, that real progress today. But as you know, sort of famously, the timelines are long, 10 to 15 years. We're shrinking these, but it will still take some time to go through the entire procedure. We do think, especially the first third of the process can be shrunk down massively. So we'll see this acceleration. It'll take a little bit of time. And yeah, I think we're getting much closer to these results, but it's not going to be tomorrow.
What are your conversations like with regulators? Like, how open are they, and how willing and nimble are they to adjust to the developments that are coming out of your sector?
Yeah, I think everyone's talking about this space. Everyone's watching quite closely. There are new questions being raised. I think it's a space that hasn't converged. We're sort of watching this closely. We're engaged in conversations. We're very happy to talk with regulators more. I think there might be some change to be had to accelerate this even further. But again,
do you get a sense that there's willingness from regulators to actually move more quickly on this, particularly when it comes to clinical trials?
Yeah, I think, obviously they have a fiduciary care to be balanced with the benefits of more speed and sort of breadth. And they're taking this very seriously for good reason. Mm-hmm. So I think they're very interested, but it needs to all be done with appropriate care.
There is increasing competition within your space. Do you see consolidation? How does this play out? You have quite a different business model to some of your competitors. Does it lead to consolidation? Are you looking potentially at acquisitions?
I think, it's so early, to be honest. Like AlphaFold, the breakthrough model that won Demis Hassabis and John Jumper the Nobel Prize for Chemistry just last year, it's like 4 years old by now. So really, we've only now seen these advanced AI models making massive impact. So we're yet to see this fully play out. I think in our industry, there's a couple of players in this space. I think everyone has slightly different hypotheses. It's not converged. It's kind of like, several, rockets launched into orbit, and I think they will all be able to reach orbit, maybe go somewhere else. The space is huge. So I think we're far away from consolidation, to be honest.
OK, that's interesting. What about future funding plans, then? You've raised 50 million. Does that secure you for 2025? You're looking to raise additional funds, and what about IPOs?
Not immediately. I mean, we've raised the appropriate amount to really accelerate our mission. I think it's exactly right. And we're going to double down in all these areas that I mentioned earlier. And then we're going to be looking into sort of, how to grow from there.
Because you've been in stealth mode. I mean, basically, you've been keeping a very low profile.
That's right.
And part of that is because you just want to be able to build and execute and ship quite quickly before your competitors pick up on it. And now you're out public. You've raised 50 million. And that ties you over for 2025?
Yeah, absolutely. Yeah. So, we've built a fantastic machine learning team. We also have our own lab in San Francisco. We've been able to do all of that in stealth.
Just briefly, before we let you go, which parts of the pharmaceutical space, which drugs are most ripe for the kind of innovations that you're coming? Are they cancer drugs? Is it other parts of the space? What are you looking at?
Yeah, for us, it's largely biologics. So that means protein-based drugs, such as antibodies. And as you say, cancer drugs are one of the obvious ones to go after. And, they're a very big and impactful market, and we're very excited about that.
OK, Simon, thank you very much for coming to the studio. We wish you luck. And you've raised 50 million. We'll continue to monitor the company, see how you guys fare. No need for consolidation right now. Plenty of space to grow in a potentially $1 trillion market. Simon Kohl, CEO and founder of Latent Labs. There's plenty more coming up. Stay with us. This is Bloomberg.
The first thing for investors to do is to understand what is the full potential adverse impact of tariffs if they're implemented.
We have higher prices and lower growth because everything's going to be more expensive. And also, the tariffs are going to disrupt supply chains, so that's also going to lower productivity growth.
We've seen that when tariffs were announced on Canada and Mexico. They were preparing retaliatory tariffs. I think it's very unrealistic that other trading partners will just sit by as the U.S. puts tariffs on them.
What is his plan? I think it's very confusing for our trade partners not to know what it is that he wants.
The good news is the markets do sort of get a little desensitized to it. I think people realize that Donald Trump is a very unusual president.
Bloomberg Markets Live Pulse survey showing investors are bracing for further weakness in the US Treasury market as they bank on President Donald Trump's tariff threats becoming reality. No specifics, though, no details from the press conference that he gave yesterday around these additional reciprocal tariffs, and that's giving the markets some relief. It certainly did in the session yesterday. Here's the breakdown in terms of the deficit that really animates the president. The Chinese deficit in red, the Mexican or the US deficit versus China, the US deficit versus Mexico, and US deficit versus the EU in blue. And that's what animates the president, even though probably it tells you more about the strength of the US consumer, the strength of the dollar, than it does about countries taking advantage of the US. At least that would be the contention from many economists out there. But that is in focus, clearly, for the president. We await more details on those tariffs. Let's flip the board and have a quick look at European stocks, because despite the tariff threats and the volatility and geopolitics, European stocks 50 breaking through fresh records, getting to levels we've not seen since 2000. The European stocks now back on a sustainable basis. The momentum, at least for now, seems to be there, and certainly relief around a potential ceasefire. A long way from this yet, though, but a potential ceasefire around Russia and Ukraine seems to be part of the factor, as well as earnings coming through for European stocks as well. Let's flip the board and have a quick look at Hermes. Talking about earnings, Hermes at the highest end of the luxury space, of course, has been more resilient. The stock is up about 30% over the last 12 months. Earnings out shortly. We'll break those down for you, of course, and we'll see what the impact is around the China story and US and the consumer there as well for Hermes. Now, British lender NatWest, just going to promote some interviews that are coming up. We'll release its earnings in just a few minutes. The team are going to break them on the opening trade. CEO Paul Thwaite gives us his first TV interview since taking the top job. Stay tuned for that conversation. At 9:30 a.m., meanwhile, former French Prime Minister Dominique de Villepin will join us exclusively. And later today, Bloomberg's Francine Lacroix moderates a panel from the Munich Security Conference on the future of US-Ukraine security cooperation with President Volodymyr Zelensky. Stay with us. The opening trade is next. This is Bloomberg.